Hi guys, welcome to another video. So today, almost beginning of 2018, I'll explain why in the past almost more than decades, why I would be really reluctant in investing in apartments in bigger countries like Australia, Canada, and United States, but not in some countries or cities like Malaysia and Hong Kong and Singapore. There's reasons behind. Main reason people, let's say, main reason why people will really like to invest in apartments. For example, last time I went to Canada, I would really aim for a house, and my partner, he aimed for three apartments, which he bought it all. Okay, up to now, because in the past video I said I got tricked it or something like that, saying my agent say that I have to pay the tax, the foreign tax of around 160k Canadian dollars, which I really not comfortable in paying. But in the end, I didn't need to pay, right? So now all the struggles, now I have to look for another house in all over again in Canada. But my friend said that the index has dropped by 5 to 10% already. So it's lucky, but why I would not invest in apartments? Because why would we invest in apartments? Mainly is because of this ratio, because of the price to rent ratio. Okay, it's a ratio saying that if you're able to rent out the house, the rent yield, the rental fees will already most likely cover majority of your mortgage costs. So that is the main reason why we want to invest in apartments like that, because after deducting the electricity fees and also the maintenance and also the management fees, you still left with 3 to 4 maybe 5% rental yields, right? That's really high. For example, 3 to 4%, consider it in Australia and Canada is really high. So that has covered majority of your mortgage costs. If you are paying upfront 20 to 30% cost, or maybe 40 to 50% cost, your mortgage is really low. So that is the main reason. And as well, the apartment price will go up as well, right? But you think about that, if according to this ratio, yes, it is. So for example, if you study in UK, you look at this, but this ratio is saying that whenever if it's below 100 level, you should always buy a house, because the rental cost can cover your mortgage 100% already. If that's above that, you should rent it instead of buying it, because the mortgage the price is pretty high, so it's not worth buying a house. But in the long run, something that this ratio doesn't explain, because this ratio I explained it exactly 1 year ago, something that doesn't explain. But buying a house, for example, in Canada, the housing prices in Canada, even in Australia, in the longer run, for example, 5 years to 10 years, of course, recently the apartments prices go up because there's a specific cycle of the housing market, which type of housing will go up and which will go later. Always the housing markets go up by houses first, and then townhouses, and then not detached houses, and then condos, and then apartments. It's always like that. So when the supply and demand is filled up, it's always in the end it's apartments. It's not that recently in the past years apartments going up, the apartment houses going up, but not. It's not. In the longer run, it's always houses. The price will outperform the market. Okay, the market in general in the past 25 years is around 4 to 5% before leverage. The growth is around it like that. If you leverage, for example, you pay 50% upfront, it's double. If you pay 30%, it's almost triple, saying that 10 to 15% for houses. So houses will outperform this index. Apartment will underperform. So it will always say like that. If, for example, if the apartment is going up for like 2% per year, so after 10 years or 2 decades, the rental cost will only be the same, almost be the same as when you bought the house 10 years ago. But if you buy the house 10 years ago, then for example, I bought a house in I bought an investment in house 10 years ago in Canada, is most likely going to not only cover your mortgage costs, you will also, because the houses, the price has gone up triple, right? Your rental cost can also be triple, okay? So that you are already not only covering all your mortgage fee, you can also, after paying the mortgage, you have also 100 to 150% net cash flow flowing into yourself. That is exactly what Rich Dad is talking about. That is your investment. But one thing I don't understand about the Rich Dad Poor Dad is about they're saying that if you do a mortgage, is negative cash flow is a big no-no. I would say that if you don't have mortgage, how would you get your first house fully paid, right? So that's the only part I disagree with. So as long as you have the calculation right, you should take a little bit risk. If the rental fee can cover majority of your or half of your or majority of your mortgage cost, that is good to go. As long as you are betting on the 1 or 5 years terms, the housing market will still go up. Or tie, you still the maximum loss is what you are paying. For example, if I buy a house now in Canada, in Toronto specifically, in the Bercy area, which is the #1 high school top one in that area, it's $1 million Canadian dollar. Is one single garage door. It's 1 million, and I still have to, after paying 20% down payment, because I'm able to get 80% of the mortgage to leverage. So I still have to left with 1,000 Canadian dollars per month. It's just like saving your money in an account. So the only thing you will lose battle is in not short run, in the longer run, 5 years or 10 years, the housing prices will be lower than today. So now it's about another video I talk about. It's about bubble, or the bubble is going to burst. Is two different things, okay? So that's one thing. But in some major countries, for example, Hong Kong is pretty unique. Hong Kong there's nowhere to go. If you move north, it's China. If you move south or elsewhere, it's the sea, okay? So that is a special area, so you should only invest in apartments. If you invest in houses, most likely it's not transportation friendly. So the housing prices of those area will usually tie or even underperform the index. So if you want to buy, if you know Hong Kong, Tsim Sha Tsui, Central, or the major city, for example, I live in Hong Kong, which is here. This is the Tsim Sha Tsui area. This is Tsim Sha Tsui to the central. Hong Kong is here. It's the transportation, what's that called? It's called MTR, but it's called subway. Okay, it's going going through that city. It's already, 10 years ago, it's only 2 million Hong Kong dollars. It's already now 6 million Hong Kong dollars, triple. Okay, so you should buy apartments because there's no houses in those cities, right? In those centralized cities. And so, for example, last video I talked about investing in the heart of art in Malaysia. It's around 500 meters beside the Twin Tower. The rental yield is as high as 6 to 7%. But once you left 1 to 3 kilometers away from the Twin Tower, it's really cheap. It's really cheap. For example, this is not something that they will not talk about. It's really cheap. It's really way below 100. You should buy a house, right? But you will buy a house that will never appreciate. You will never able to appreciate your rental cost. So that is something that's special. Is country to country is special case. And also in Germany and in Canada, right now the new policy is that you cannot raise your rental cost. You can raise it, but it's really, really tiny little movement. It's just like corresponding to inflation, for example, 2 to 3%. Even the housing prices gone up a double, you cannot raise your rental fee because it's protected by the government. So I think you should bear in mind about, in general, just one thing: if your property will go up or not. Rather not if apartment or house, but you have to look at some countries, their apartments usually house prices will outperform apartment and condo. In some countries, for example, Canada and Germany, they are not really allow you to make major movement in your rental cost. That is all put into the same formula. You should take all into account of an investment. So right now, I prefer apartments in Colombo. For Thailand, you should buy in Bangkok. For Hong Kong, you should buy literally in Hong Kong Island or Kowloon Island. If in other areas in Australia, it's good to go because they have no policies limiting the rental fees. So you should buy houses. But in Canada and Germany, I think you should, for investment, you should probably buy apartment or condo just to break even your mortgage cost today. If you buy a house like me, I would just like for myself to move back to Canada. That's all I want. And United States is also free to move your rental price, right? I know it's state by state, but majority of the states will allow you to move the rental fee. Correct me if I'm wrong. So if you the main message is you can take a reference of the price to rent ratio, but not all, because it's case by case. So the case is about the policies and also mainly if the price will go up or not in the future. So hopefully you will still support the channel. It's really a long story. I can break down the calculation for you guys. If you leave me comments below, I will change my topic. I will adjust the topics because everything is already in my head. So if I have the chance to share, I just need some evidence that you guys are not robots. You really humans behind the screen watching my video. Just give me thumbs up and share this video to your friends. I will see the shares ratio, right? So investing make easy. I'll see you next time. Goodbye.